Okay, right. Assalamu alaikum wa rahmatullahi wa barakatuh to all of you guys. Welcome to the first tutorial class. Inshallah, I will be your tutor for this semester. So the course we're taking is Financial Accounting and Reporting number 1. And my name is Fatima Ilahi. I'll tell a bit about myself, so you know who your tutor is. And so I'm originally from Pakistan, born and raised in the US, so Pakistani American. And what else? I'm in the Kuliya of Economics and Management Sciences, and I am majoring in economics. I'm in my second year, first semester. So I'm glad to be with you all today, inshallah, and we ask Allah to allow us to get the benefits out of this, inshallah, tutorial, and make it very fruitful for all of us. So welcome once again. And inshallah, since this is the first tutorial, we'll kind of go over the basics, right? So we're not gonna rush. The main purpose here is for you guys to understand. So that's what we want. And preferably, this should not be a one, like it's only me, talking and you guys listening. This is not a lecture, it's a tutorial, right? So the difference between a lecture and a tutorial would be, you see the lecturer in a lecture, she, like Madam Putri was my lecturer. So she gave us the lecture, right? And we were listening, taking notes and whatnot, right? But when it comes to tutorial, the difference between it, why are you just attending a 2-hour tutorial when you had 2 classes in the week, right? So the purpose of a tutorial now is that you can implement what you know, right? And pitch in the class and, answer questions. You can, when I ask you, you can give me input. And as I said, I'm a student as well. So it probably it's possible that I can make some mistakes because all of us are learning. So you guys feel free to correct me if I go wrong anywhere, right? And, it'll be really amazing if we can get input from you all as well. So if you don't mind, you can turn on your cameras and, when I ask a question, you can unmute yourself and answer. So we can make this session, a bit more interactive. It would be much better, if we were face to face, but, قدر الله ما شاء فعل. So alhamdulillah, for whatever circumstances we are in. So we'll get right into this, inshallah. So I will begin to share my screen. Okay. So Madam Putri had shared with you all on Google Classroom the content for today's tutorial, correct?
Yes.
Yes.
Okay, well done. So were you guys able to go over it, like open it a bit, just look at what's inside? Anyone?
Yes.
Yes.
Good job.
Still opening.
So, okay, so basically, let me tell you now, in this tutorial, we will mark attendance as well. And how that will be recorded is I will share with you guys a link to a Google form, okay? And you guys will basically, log into this, you will go to the Google form and you will mark your attendance. So I'm sharing it right now in the chat, right, in the chat. And then you guys can, inshallah, open it up, you see. Sorry, man, I can't. How do I do this full screen right here? You know what? I'll just share it on the Google Classroom. Are you guys can access it through your Google Classroom, okay? So I'm sharing it there right now. Classroom tutorial attendance. So this is how it's gonna look. Basically, you fill up your name, metric number, and section. Okay. So my Madam Putri already shared it. Okay, so it's already in the classroom. Madam Putri just shared it. It's Madam said that it's not compulsory, but you should fill in the attendance if you attend today. All right, so you guys can access it from the Google Classroom. Please fill in your attendance and mark that you are here if you're attending the class. Okay, and I will also share it in the tutorial group, right? So in case, right? Okay, Bismillahirrahmanirrahim. Now let's start with our okay, may I ask you guys, what did you guys cover with Madam or whoever? Okay, is Madam Putri all of you guys a lecturer, or you guys belong to different lecturers?
Yeah, we belong to Madam Putri lecture. Yeah.
All of you guys.
Sister, your sound is
Yes. My screen is not sharing.
No, it's okay.
no, it's fine.
Okay, one sister was saying something. What did you say, sister?
I think your voice a bit lost. Maybe my signal or yours.
Okay, can the rest of you guys hear me? Is it everyone or is it from my side?
Yes, I hear you clear.
Not clear, sister.
Okay, so it's probably something on your end. Inshallah, you can. It'll get better in a while, inshallah. Okay, so let's start with a brief thing about okay, what is financial and reporting and financial accounting and reporting all about? What is it about? What do you understand from financial accounting? Like, you've done your first 2 weeks of classes, and some of you guys have come from a background which is not, you don't know about, you haven't done this before, right? Some of you guys, and so you kind of, this is a new thing for you guys, and others, alhamdulillah, you have already done it, so that's really nice. But okay, so I want to ask you guys, what do you understand from financial accounting and reporting? Can anyone answer? What's the whole purpose of it? What's the reason or thing behind this thing? Go ahead.
May I try?
Yes, please.
Financial accounting reporting accounting is like a report to make the to help the decision maker. So it's for external users.
Very good. So you mentioned that it's for external users and it helps make decisions. Okay, but what is it like? What is it about? Anyone else can help enhance her answer? What do you do in financial accounting? It's recording transactions, right? In financial accounting and reporting, so look, a business entity, throughout the day, it has various transactions which take place, right? So a supplier came and, they bought some machinery, and then they sold some goods, and then they, all these transactions taking place, bought supplies, sold, to creditors, sold to debtors, someone paid them, someone still has to pay them. Imagine if the business did not record any of these transactions. Then how would you know, okay, who owes me, who do I owe, how do I have to pay them, when do I have to pay them, what are the expenses that are coming up, all of this stuff. So the purpose of financial accounting and reporting is to record transactions, right, in the business, during the business activity, right, business activity transactions. So that's like the basic reason behind financial accounting and reporting. So you're recording the transactions in a business, right? It's a very in simple terms. And then what the sister just said, that it's for external users, and the purpose is, it helps in decision making. If someone wants to invest in this business, how is the business doing, what are the assets, the liabilities, the equity of the business, how much dividends does it have to pay. So some of these words will be new to you. Please don't get scared by the new terms and everything. We'll go slowly, inshallah. So do you guys understand the basic reason behind financial accounting?
Yeah.
Yes.
Good job, alhamdulillah. Okay, so now we'll start off with something which you guys might have heard before, but inshallah this will help you get a better idea maybe of what this is about. Okay, what is this called? Accounting equation, right? Anyone heard of this before? Is this the first time you're hearing it, or you heard of this before?
No, we heard it before in class.
Okay, what does this mean? What is an accounting equation?
Assets is liability. Asset plus. I forgot.
Okay.
Sorry. Asset plus liability equal equity.
Very good. Good job. Everyone agrees with her? Did she make a mistake there?
Yeah, she's right.
She's right.
Yes.
Okay. Everyone agrees, right? How come I'm not hearing anything from the brothers? Only sisters? No brothers in this class? What do you guys think, brothers? Is she okay?
Yes, same.
Okay. Good job. So basically, what is the accounting equation about? It's assets plus liabilities, right? Is equal to, right?
I think asset equal to liability plus equity.
Or is it liabilities plus equity is equal to assets?
Assets plus liabilities, A plus L is equal to, it's assets plus liabilities, right, is equal to equity. Oh, no, it's equal to assets are equal to liabilities plus equity. Thank you for that correction. Jazakallah khair. That means you guys are attentive in class. Very good. Keep that up. Okay, assets are equal to liabilities plus equity. Everyone agreed with her before? Okay, you guys, it's good to disagree, everyone, that way we'll know, we'll know what is right, what is wrong. Very good. So assets are equal to liabilities plus equity. Okay, what does this word assets mean? What is liabilities? What is equity? Why are they equal? Okay, let's look into this one by one. What are assets? Can someone define assets? Not like, I'm not asking you for the definition from the book, something that's really, what do you understand from the word assets? What does assets mean?
It's things belongs to the business.
Things that a business owns, right? And what about controls?
That need to be controlled.
Yeah, things that are owned and controlled by the business. Yes. Okay. And anyone else can add on? Very good, sister. Did very nice. Okay. Someone else can add on. Anything else to do with assets? Assets are things owned and controlled by the business, right? Okay. Is there anything else that we can add about assets?
Have value.
Yes, they add value to the business. They add value. So they're not just some ordinary something that a business owns. This actually adds value to, we won't say things. What's a better word to use? Resources. Okay, let's put resources. So these are resources owned and controlled by the business, and assets, they add value. Okay, which add value to the old and control. Which add value and also let's use a better word. They cause future inflow of economic benefits, right? So basically, which allow the business, right? This is right. Which bring future inflow, okay, of economic benefits. Economic benefits means monetary, right? Benefits to the company. Okay. All right. So very good. So this is what assets are about, right? This is what an asset is. These are assets are resources owned and controlled by the business, which bring future inflow of economic benefits. Okay, let's bring this a bit smaller so we can see the whole thing. It's visible, right? You guys can see it. It's big enough, right?
Yes.
Okay, so this is what assets are. Everyone understands what an asset is, right? And assets are resources that a business owns, right? And controls, not only owns. So imagine if a business owns a particular building, but now this building or this machinery is not controlled by the business, but it's, can someone give me an example? How can a business own something but not control it? How is that possible?
Like IIUM school building is owned by IIUM University but controlled by IIUM school.
Okay, so very good. But in simpler terms, just one word. What is it called? When you own something but you don't control it?
Rent.
Yes, very good. This is called rent, right? I can own a building, but I don't control it because I've lent it out to someone else. You guys understand that? So an asset must be owned and controlled by the business, right? And this which bring future inflow of economic benefits to the company. Okay, so okay, and sometimes I remember Madam was adding that, okay, it doesn't really have to be. Sometimes the employees that come to work, right? They are, a company can't own the workers, right? They don't own them, but they're on such a contract that they are, they stipulated conditions that they have to stick to these particular conditions. And so they're considered assets for the company because they know they're here for 5 years, and so the company controls them in a sense, but they don't own them, but they're still assets, right? So you own is not always necessary. If basically the more important thing is it is controlled by the business. Okay, so this is what, now there are types of assets, right? There are two types of assets. Okay, can someone help me out over here, right here? What are the two types of assets?
Current asset
Supplies,
and non-current
cash.
asset.
Non-current asset, current asset.
Yes, very good. So okay, someone said cash. Cash is a type of current asset, but we're looking at the broader category, the one on top, right? So what is it? It is a current asset, right? A current asset and a non-current asset. So number one is non-current assets, and the second type is current assets. Okay, what do you understand from non-current assets? What does it mean by non-current assets? What are non-current assets? Non-current assets, basically, they are
For long term.
long-term, okay? An example?
Motor vehicle.
Motor vehicle, yes. They
Is plant equipment.
land, equipment. Okay. Anything else?
Building.
Yes. Buildings. Okay, let's put examples here, okay? So example, what are examples? Land. Okay, think about it. Why is land non-current? Can we sell land so easily? We can't sell it so easily, right? And they're like something it's owned for the business for a long period of time, and you can keep it. The business can actually generate revenue from it, and it can use it for a longer period of time. So like a land, it's something which is it's something that is for a longer benefit to the company, right? So like land, then you have the building. You can't sell it so easily, right? And it's something that's there for the company. It's part of the existence of the company, right? Land, building. What else?
Machinery.
Machinery. Yes. So all of this is considered non-current assets. Okay, now you will see a word which is called, I don't know if you guys are familiar with it, but it's called PPE. Anyone heard of it? PPE? Let me tell you what PPE means.
No.
Okay. Not yet, right? So I think a future. Yeah, someone was telling me what it is. Go ahead.
Property, plant, equipment.
Yes, very good. Plant, property, and equipment. So you can all these, instead of writing land, machinery, building, right? In the final exam, or you don't have so much time, right? Writing land, building, machinery, unless they've listed all of them down and you have to write them. But an easier way is to write PPE, or plant, property, and equipment. So plant would mean the machinery, right? Plant is the building itself, property is the land, and machinery is the equipment. So you put it together as PPE. So if you look through your course outline, you will see that this is a chapter. You have to madam is going to teach you this in detail. Okay, so this is plant, property, and equipment. This is what it means. Okay, so this is what non-current assets are. Now let's move on to current assets. So what are current assets?
Cash, bank,
They
inventory.
can easily be converted into cash, right? You can easily get cash out of them. The company needs cash. They can easily sell them out and generate cash. So the examples one of the sisters is saying is cash. Okay, let's try from the more non-liquid ones, the ones that are harder to sell. Which ones? Which one is a more something that's not so hard to liquidate, to turn into cash? I'm sorry, not so easy to. What is a non-current asset? So a current asset that cannot be converted into cash very easily.
Inventory.
Okay, before that even, have you guys heard of debtors? Or you've heard of account receivable? Yes, that's what we say. Account receivables. What are accounts receivables? Account receivables. What are account receivables? Okay,
Debtors.
Debtors, yes, they owe you, right? These people owe you. That means that let me give you an example. Okay, a company sold an item, sold a good. Okay, for example, the company sells they sell furniture. Okay, a company sells furniture, and this company sold a furniture to one of its customers. Okay, what did the customer say? I don't have money right now. Can I pay you back within 30 days? So then the company said, okay, fine. You have a 30-day period to pay me back, right? So what would it mean then? These people are now the These people are now the debtors or accounts receivables for the company. the company must receive money from these people. So imagine the company can receive money from them. So these people will bring money into the business, right? So these are actually assets for the company, but they are current assets, not non-current assets. They're not like something plant or machinery or land, you know, they're more liquid. So they are current assets. Accounts receivables. Do you guys understand the concept of accounts receivables?
Is it like debt?
Yes, yes, exactly. That's a good word, debt. So the person who owes the company is a debtor or the accounts receivable. Accounts receivable is more, what do you call it? Like you can say a modern term or something that, you know, that's accounting term. But a simple way to understand it is debt. You know, someone has to pay you. That's it. Okay, so that's what basically accounts receivable means. All right, and what else? Okay, if anyone does not understand, you see, I can't see all of you guys. I can't try to understand from your facial expressions or the way you're looking in your copy, you know, whether you understand or not. But hopefully you guys are taking notes. Let me tell you, this stuff really is important because when I was studying accounting, I used to go to the tutorial, right? And Brother Ahmad was our teacher, so he taught us, and I tried to take all those notes. And guess what? Today, when I teach tutorial, I teach from the notes that I took. Right? This is my notebook. These are the notes I took from my tutorial and my Madam Putri's class. So you guys, inshallah, you guys are future tutors, future, what do you call it? Accountants. So not necessarily everyone going into accounting, right? But you know, you can help others from your notes and help yourself as well. So please do take notes of, you know, what is being discussed. It will definitely benefit you and come in handy, inshallah. So accounts receivable. Does anyone have any questions regarding accounts receivable? Do you understand the concept of accounts receivable? Or debtors?
Yes.
Can I hear from 2-3 more people? Everyone understands?
Yes.
Yes, we understand.
Yes.
Okay. Okay. Now let me ask you another question. Anyone has any questions so far?
Is it the same as trade receivable?
Okay. Yes.
Trade receivable, is it the
Trade receivable. Trade receivable. Okay. Account receivable and trade receivable is it's kind of almost the same concept, but it's different wordings. Trade receivable is like accounts receivable can do with you know, with goods as well, goods and services, right? But trade receivable it has to do with what do you call it? I think trade receivable is for the goods and account receivable can be for services or goods, if I'm not mistaken, right? So it basically, this trade receivable is more particular to a certain type of debtors, but account receivable is kind of general. You understand? You will see trade receivable sometimes in the question, right? So then you just write what you see in the question. But account receivable is kind of general. It's for, you know, all the debtors that owe the business. Do you get it, Brother Ammar?
Yes, yes.
Okay. All right. So account receivable. What are the other current assets? Can I ask Sabirin to tell me one? Is Sabirin in the meeting? I don't know you guys' names, so I just know a few of you guys here. The rest of you guys, inshallah, I'll try, you know, going through the list and looking at your names, but please, everyone participate. Anyone else? Accounts, current assets.
Cash.
Very good, cash. Anything else?
Supplies.
Inventory.
Okay, supplies, inventory. Okay, can I ask
What
what's
is
the
means
difference?
by
What's the difference between supplies and inventory? Isn't it the same thing? What do you guys think? Is it the same thing or is it different?
Maybe supplies is like I don't know. Sorry.
Okay, no problem. Anyone else? You can try, give it a shot. You don't have to be right. Everyone's learning, right? Everyone can make a mistake. And you remember, you learn how to ride a bicycle after you fall, right? You learn how to do something after you make a mistake. So please don't get shy of making mistakes because that's part of the nature of man, right? We all make mistakes. But the main thing is try, go ahead, give it a shot. Anyone? What's the difference between supplies and inventory?
I think inventory is something that we already have, like in yeah, that we already have, but then supplies is coming from other sources.
Some inventory is something that you already have, and supplies come from other sources. Okay. Anyone else? Mashallah, that's a good one. Inventory is something that the business already has. It's kind of close, but not exactly. Okay, anyone else? One more chance, then I'll tell you what it is. Can someone else try? Come on, guys, let's make this a little more interactive. Anyone? The difference between, okay, so there are some chats coming in. Let me, stock. Okay, what exactly is stock? It's good that you, inventory and stock kinda are the same thing. Okay, let me tell you now. Inventory is meant to be sold, right? The company produces this or buys this, right? If it's like if it's a production company, so they will produce these goods, right? And these are goods to be sold. Inventory are things that are bought by the company to be sold ahead, right? So the company buys these things, stores them by it, right? And these things are current assets because these are the things that the company owes. And why are they current and not non-current assets? Because they can easily be sold and changed and converted into cash. You guys understand? So inventory are things that are owned by the business, are goods owned by the business for resale. The company will sell these ahead to others and get back cash. You understand what inventories or stock is, right? That's what inventory or stock is. Now, when we come to supplies, what are supplies? Look, when right now we're using the computer and the internet and all these stuff, right? So our supplies in this case, in this sense, would be laptop, right? It would be the applications we're using, the Zoom, the Google Meets, or the Google platforms that we are using. These are the supplies that we basically things that the company uses for the day-to-day operation of the company. And in the case that we're studying in the university, we're using a whiteboard, we're using markers, right? So these are assets that the company owns, right? But then they use it in order for the day-to-day operations, right? The supplies, for example, the pens, right? The pencils, the pens that we use, right? The copies, or a teacher has to use what do you call it? The lecturer needs to use the markers, right? The whiteboard, whiteboard eraser, right? So all these things are considered supplies. You guys understand the difference now?
Is it like machinery maybe in production, or is it different? I mean, like, is it included in supplies?
No, machinery is non-current, right? Machinery is long-term. It's something that it's long-term. It's really it's not it cannot easily be liquidated. It cannot easily be converted to cash, right? But supplies are like small things, like like a pencil, a pen, markers, whiteboard erasers, whiteboards, right? The projector. These are like small supplies that we use. Understand? Like the paper clips, staplers. These are called supplies. Do you understand?
Oh yes, thank you.
You're welcome. So now we've gone over the assets part of the equation. So I think we've got to hurry up a bit so we can go into the questions, inshallah. Okay, assets. Now we're going. There are a few more, right? But these are enough for now. Okay, so we talked about assets. Now assets are supposed to equal to liabilities plus equity. What are liabilities? Liabilities. Let's look into this in a
Is it debt that need to be paid?
Okay, these are debts. Okay, very good. These are debts. And anything else to add on to this?
Obligation.
Obligations, debts, right? Okay, so you guys were correct. Present obligations of the capital, basically obligations of the business that they have to pay to others. Okay, so it's kind of opposite from assets. Assets were things that they owed us, and now liabilities are things that we owe them. The company has to pay the bank, has to pay the creditors. So these things are things that company owes, and assets are things that the company owns. Understand? Owns and owes. So assets are things, resources the company's resources the company owns, right? So this is the main word, owns. And this liabilities are obligations, right? Obligations of the company, or thing, or things, we will say, like, to simplify, these are obligations of the company or things that the company owes, right? Things that, let me see, right? Things or money or whatever you can call it, right? So this, look, you guys should understand this, that what I'm writing here, you don't write in your exam, right? You go, this is just to make you guys understand the concept, right? This is like simple terms, layman words. So for the real accounting words, you should go to your textbook. Okay, don't use like, go tell madam that liabilities are things that the company owes. That's not the correct exact definition, right? This is just for you to get a better understanding. So when we're going through the question, then we don't have to stop at, okay, what is a liability? What is the equity? How do we record an asset? Right, these kind of things. So, or things that the company owes, okay? Owes. So the difference is owns and owes, you see? Owns and owes. Owes means they have to pay. Owns means that they own it, they possess it. Okay, so liabilities are obligations of the company or things that the company owes. What are the two types of liabilities?
Non-current liability.
Okay, non-current liabilities and
Current liability.
very good. Okay, now we'll go through this a bit faster, right? So that we can, okay. So we have non-current liabilities and current liabilities. Very good. Okay. So we just change this to liabilities. All right. Okay, what are non-current liabilities? Let's run through them really quick. What are non-current liabilities?
Loan, long
Okay, long-term loan, yes. Okay. Examples are long-term loan, example 5-year loan, 7-year loan, right? So we have long-term loan.
mortgage loan,
Okay, yes. Mortgages, long-term loans. Okay, loans, mortgages. Then you have
debenture,
okay, debentures. These are all, don't get scared, huh? These are different types of liabilities, different types of things that the company owes. Mortgages are for buildings and houses. Debentures are for, short-term thingies. Like, for example, a company now has to pay rent, right? But they don't have money. So they're just gonna give a debenture to the public, right? It's like a little piece of paper, and basically that paper has value. So in return for this paper, that like a receipt that the company gives to the public, it gets money, right? And this money is for the company uses this money, and then after that it repays it to the people that that owed, that lent them the money, and these are known as debentures, right? So basically different types of liabilities. Okay, anything else? Long-term loans, mortgages, debentures. Do you guys have anything else in mind? Okay, let's move to current liabilities.
Account payable.
Right, very good. Accounts payable. Can someone please explain to me what are accounts payable? Because you already know what accounts receivable are, right? So it will be easier for you to explain what are accounts payable. Accounts receivable, accounts payable.
Debt.
What does it mean?
Debt that need to be paid.
Yes, debts of the company, right? Debts of the company, right? Anything else? Any other explanation for accounts payable? So this is actually very this is true, correct. So a company that, let's use that same example now, that the company bought machinery, but we bought it from our creditors. Now these people who give us credit or give us things on credit are known as creditors. So we bought it from them, right? We bought these things from them, and then machineries, for instance, and now we don't have enough money to pay them back. So we say, please, can we get 30 days to pay back? They said, okay, pay back in 30 days. So now we have to pay them. We owe them. They are our creditors and they are our accounts payable. So they are a liability to us because we have to pay them back. Is that clear?
So meaning that
Yeah.
the money needs to be paid to the supplier, is it?
Yes, to the suppliers or the creditors. Yes. We need to pay them the money. So the company is the debtor in this case, and they are our creditors or our accounts payable, right? So we will record them as accounts payable because we have to pay them. Just simple. Receivable, we have to receive from them. Payable, we have to pay them. Receivable, since we are receiving from them, it's an asset. Payable, since we are paying them, it's a liability. Is that clear? Is that clear?
Yes.
Okay, sorry.
Sister,
Yes.
how long the debt? I mean, like for non-current liabilities and also the current.
Okay.
There is like
Yes.
a certain measurement?
Yes, there is a time, and so the time period is 1 year. So 1 year and less is non-current. 1 year and more is current. Oh, okay, more than 1 year. Sorry, 1 year and less is non-current. Sorry, what am I saying? Okay, 1 year and less is current liabilities, and more than 1 year is non-current liabilities. Does that answer your question?
Yes, thank
Okay.
you.
You're welcome. So is everyone clear about accounts payable? Any questions? Please do not feel shy,
Yes.
okay? Sisters, brothers, any questions, please ask, because you have this platform now. Can you guys still hear me?
Yes.
Yes.
Okay.
I want to ask something.
Go ahead, Anna.
How about tax?
Tax?
What taxes? Like what it falls under liabilities, right?
No, tax are not liabilities. Tax are expenses. Expenses. So
Oh,
we'll look at that later, inshallah. So right now we're looking at liabilities and assets. Okay. So that's expenses. That's another category. Okay. Any other questions?
Sister, is
Yes.
account payable is debit or credit?
Okay. Accounts payable. Okay, we'll get to that just now. Okay, just with regards to what is already covered. Any questions regarding this? So we'll come back to this brother Rahman's question and also the sister's question just in maybe a few minutes. But how about what is already covered? Like, do you guys understand the accounts payable part and the loans and everything?
Yeah.
Is that clear? Can we move on then?
Yes.
Okay, very good. Accounts payable. Can someone give me another liability? Example of a liability. Accounts payable. What else?
Overdraft bank.
Okay, bank overdraft. Okay. A bank overdraft is basically when wait, bank overdraft. The one who said it, can you explain it to the others? What does it mean by bank overdraft?
Business owes money from the bank as we use more than
So the business owes the bank. Basically, it's like a current loan. Basically, it's like a short-term loan, right? Let's just check. Bank overdraft. It's not coming to mind right now. Inshallah, we'll just make sure. Okay, let me just read what I have. An overdraft occurs when money is withdrawn from a bank account and the available balance goes below zero. In this situation, the account is said to be overdrawn. You guys understand that? We borrow money from the bank, withdraw, not borrow, withdraw our own account. The company has an account in the business, in the bank account. So it withdraws money for personal use, and the money withdrawn, it's more than how much the company had in the bank account. So that's overdrawn. It's called an overdraft. Understand?
It mean cover the transaction.
Can you come again?
Is it like covers our transaction?
A commerce transaction, it's like a withdrawal from the bank account. When you go to the ATM withdrawal, that's like a personal thing, but then what company is taking out from its bank account, but it withdraws more than how much it has in the bank. So that's an overdraft, like more than how much it has. Understand?
Yes.
Okay, very good.
Yes.
So some more examples. Come on, one or two more. Anyone to add on to that? Okay, we have short-term loans. You know how we had long-term loans? Over here we have short-term loans. Short-term loans, right? And accrued expenses, income taxes, interest payable, accounts payable. Basically, okay, these are some basic ones, okay? Accounts payable, bank overdraft, short-term loans. Okay, now this asset should equal to liabilities plus equity. Okay, what is meant by equity now? What is equity?
Capital.
Equity is capital. Okay, the things of value. Basically, equity is capital that is okay. Basically the equity is what the company starts off its business with, right? That's a capital, right? That's what the company starts off its business with, and okay. The quality of the value of the shares issued by the company. Okay, let's get a better definition. Equity represents the shareholder's stake in the company. Identified on the company's balance sheet, the calculation of equity is a company's total assets minus its total liabilities. Okay, so basically these are what you said is correct. Equity is the capital what the business owns. So what the company, what the business starts off its business with, right? That is called the capital, and it can get it through various ways, right? So some ways of equity, then it can, okay, the company wants to start off a business. It has to either borrow money or it needs to issue shares. What does it mean by issuing shares? Issuing shares means a company basically, there's one person who starts off the business, right? Now or the company, like 3-4 people who start off, they issue shares that's basically like little tiny pieces of the company's ownership, right? So when a person issues a share, the company issues a share and someone buys it. Now this person becomes a shareholder. It holds the share. And what does it mean by having a share is that now this person is part of the ownership of the company. This person also owns that company. Okay, it has a part in the ownership of the company. So equity represents the shareholders. Equity, it represents the shareholders. Their shareholders stake in the company. Okay, so equity is represents the shareholders stake in the company. Okay. All right. Under equity, what comes under equity? What are types of equity?
Share capital?
Okay, share capital, right? So let's put it right here. Example. Share capital. Okay. And what about, okay, what is meant by share capital? Remember I told you about the shareholder thing? That the company issues shares, which is tiny bits of ownership of the company. So issues the shares, the people who buy those shares basically give money to the company now. So that's how the company issues capital. It gets money to start off the company. And then those people who buy the shares are known as the shareholders. They hold the shares. They're part of the ownership of the company. They're owners of the company now. Okay, and then after that, the capital, the money that is gathered through issuing shares, right, is called the share capital. Do you understand what is meant by share capital? You guys
Is it the money given by the shareholders?
Yes. The money that given by the shareholders when they buy the shares, then the money that they give to the company is known as a share capital. Understand?
Hello, sister.
Yes.
I'm still confused about this share capital. Why is it under equity but not in asset? I'm still confused about that. I'm confused about asset, equity, everything.
Brother, your voice is very low. You're confused about capital, and then after that, I understand what you said.
I'm confused.
Okay.
Why share capital under equity, not an asset? That's the thing because it's just almost the same. It has value, right? But why it fall under equity? Yes.
You're talking about the share capital.
Yes.
Okay. Share capital is equity because there's something called add value or increase economic benefits. Remember what we said here for the assets, which bring future inflow of economic benefits to the company. These are future inflow, right? This is something that, okay, assets, right? I have machinery and I'm going to produce goods by my machinery. I will sell these goods ahead now. For example, the Coca-Cola company produces Coca-Cola, right? Pepsi or Sprite. We have so many different companies, right? The chocolate companies, Dairy Milk. So that their product, the good that they're producing, right? Through the machinery that they have, right? It's the chocolate. Right? That's the what do you call it? That is their asset, right? That's the good that they're selling. Then when they sell this asset, they sell the Pepsi, the Coca-Cola, they sell the dairy milk, they get back money, which is the economic inflow of economic benefits to the company. This is what an asset is, okay? An asset, it brings future inflow of economic benefits. When we're talking about equity now, it's different because equity is what you start off the business with. It's not something about future thing. So it's something like, like when you want to start off or begin the company, right? Then you have share capital and you have retained earnings. Retained earnings are things. So how do I explain in better words? Okay, so when you want to start off the company, then you're supposed to have something, right? You're supposed to have something to start your business with, start your company with. So that is known as a capital or the equity, right? But assets are things that bring future inflow. when you have, like basically the money you start off your business with, right? That would be the equity. And then the assets, the machinery you bought, that stuff, the building, this stuff now you will use to produce economic benefits. You produce from it. So these things are now your assets. Do you get the difference?
Yes, yes, thank you.
Okay. Inshallah, listen, when we go into the examples, you guys will understand better, inshallah. This is just like the basic concept. So that's probably why you're not understanding it in depth. But inshallah, hopefully when you go on to the examples, you know, and the questions, then you'll see, okay, this is what an asset is and this is what an equity is. Okay. So we have the share capital. We also have retained earning. What is meant by retained earnings is, okay, let me tell you. So the company, it produces economic benefits, right, through the sale and you know, of goods and services. What happens now is these economic benefits, then it brings in profit, right? Profit from sale. So basically there's a cost of producing something, right? And then when they sell this ahead, they sell it for a higher price. So the difference between your cost, right, and the selling price and the cost is your profit, the company's profit. So the company gets profit now. From this profit, right, it does two things to this profit. You guys understand? You guys following me, right? So the company sells its goods and it gets profit. Okay, or it provides services and it gets profit. You understand the concept of profit, right? Profit is like the economic benefits coming into the business. You guys understand?
Yes.
Okay.
Yes, yes.
Okay. Now from the profit, what does the company do? There's two things. It either gives this profit out to people, not to people, to the shareholders, to the owners of the company. So this is the management. The manager is sitting on the top. They do this, right? So the profit coming in, they either give it to the owners of the company, the people, as dividends. So they give it as dividends, as a small little. Then the people receive dividends. The owners receive dividends as a return on their investment. Return on their investment of buying shares. They receive dividends. Dividends are basically a very fancy word of the profits that they get, the part of the profits that the owners of the business get. Understand? The second part of the profit, what they do is it's called retained earnings. Earnings that you get retained. What does retain mean? To retain something means to store it, to stop it, to keep it. Okay? Retained earnings are profits that are retained by the business. They keep it for maybe you know, for producing more goods, or for extending the business, for investing in different places. So these are profits kept by the business to you know, for further, you know, investments, further more growth, this kind of thing. So the business keeps these profits for its own running and does not share it to the as dividends to the shareholders. You guys understand what retained earnings are?
So for dividends is given to the owner and also shareholders.
Okay, yes, dividends are given to the shareholders of the company. Yeah, and with the owners are part of they also have a share in the company. So basically dividend is distributed to all of the owners of the company, right? And then the profit that is not distributed, it is retained. It is kept back. And it is known as retained earnings. What does the company do with this profit? It either invests it to get back return, or it extends or grows the company, makes it larger. Understand what retained earnings are?
Yes, sister.
Okay, alhamdulillah. So now we've got the whole equation. Assets are equal to liabilities plus equity. This is called the accounting equation. Now let's look at each one. Okay, so now there's something called double entry. Have you heard this word now? Double entry. What does double entry mean?
Recording
A
system.
system. Yeah.
Okay, let's ask Brother Farhad, right? He answered. He said a system. Okay, that's not complete. Can you you know, build upon your definition a bit? A system of?
System of recording transaction.
Okay,
and
recording
accounting.
transactions. Very good. It's a system of recording transactions. Okay. But what kind of system is it? Why is it called double entry?
Because they
It
need
involves
to
two or more
put
accounts.
minimal two.
Okay. Okay. MashaAllah. Very good. I just love how this class is so responsive. Alhamdulillah. And I really like it like that, you know. It's not only me giving a lecture, it's a tutorial discussion. You understand? Very good. Keep that up. So double entry, what you understand from the word itself, double entry. Double means double, right? And entry is to enter something. Double entry is the way, it's a system of recording transactions, which is very, very true, is right? Where every transaction affects two or more accounts, is entered in two or more accounts. So I'm not writing this whole thing down. I'll just repeat myself once again. And as I said, my words are not from the book or something that you can, you know, these are just for you to understand. But do write this down in layman terms so that you can understand it in layman words, in normal words, and then you can go and you can enhance your understanding and put it into proper words from your textbook. But the purpose of tutorial now is to understand the concept. Once you understand, you can bring the, you know, the technical, the accounting words in it and, you know, make a nice definition, but just understand the concept. So what all of the brothers and sisters in the class said, they said what? They said it's a system of recording transactions. Okay, that's the first part of definitions. Where, right? Where every transaction affects is recorded in two or more accounts. So, okay. So let's just write main points in here. So it's a system of recording. Okay, and another thing is that it affects every transaction is entered in two or more accounts. This is why it is called double entry. Okay, so do we understand the concept of double entry?
Yes.
Yes.
Everyone does?
Yes.
Okay, alhamdulillah. Now we move on to, let's look at different types of things. Okay, so first thing we'll look at is assets. Then we look at liabilities. Then we'll look at, sorry, this is liabilities. All right, then we'll look at equity. And under equity, we have under equity, so this is a sub thingy, right? We have revenue. So we have revenue and we have expenses. These fall under equity. Okay. I'll just enter a row here. Alright. On to the left. Okay, there we are. So assets, liabilities, equity, and we look at other things. Okay, so these are the effects of the transaction. So we have assets, right? Okay. Now we will say, okay, to increase and to decrease. Oh, before this, let me ask you guys. Okay. Did you ever hear of debit and credit, these words?
Yes.
Yes.
What do you understand from debit? What does debit mean? sometime before we talked about debtors and creditors, something related to that, debit and credit. What does it mean by debit and credit? Anyone give it a shot?
Money flow into the account of the company.
It would be known as?
That one is debit.
Okay.
And credit is money outflow from the account of the company.
Okay, very good. A good definition, alhamdulillah. So look, what is a T account? Do you see something similar in this shape and this shape right here and the T? It looks the same, right? Right? This is called a T account. What is it called? A T account. This is where we record the transactions. The basic unit of accounting is double entry. The basic thing. And how double entry is recorded is in T accounts. T accounts. Do you understand? T accounts. So this is a T account. What does T mean? T is basically a T, right? A T. So like how we see it here, a T here. Why T? And what does it mean by T account? Okay, let me just go a bit here and actually, okay. So so this T account has two sides. Do you guys see it? One is the right side and one is the left side, right? Do you guys see this? Right side, left side.
Yes.
Okay, now the right side of a T account is known as which side? Debit,
Debit.
credit?
Credit.
Okay,
Credit.
okay, someone saying debit, someone saying credit. Can you get a final answer?
Credit.
Okay, this is known as the credit side.
The right? Yes.
Right? Does everyone agree with this? This is the credit side?
Yes.
Okay, very good. So this is the debit side.
That's fine.
Okay, this is a debit side. Okay, so the T account now has two sides. What are the two sides? Debit side and credit side. The debit side is on the left side of the T account, and the credit side is on the right side of the T account. Understand this? This is a basic thing that you need to understand. You guys get it, right? Okay. Now let us understand. What does it mean by credit and what does it mean by debit? To say that debit to increase, credit to decrease is kind of wrong. You know why? Because every account has its nature, the type of account.
Yes.
So not all accounts are debit to increase, not all accounts are credit to decrease. So this is why we have to be careful. So how are we going to start? Debit side, credit side. Credit side is the right side, debit side is the left side. Everyone get this, right?
Yes.
Okay.
Yes.
Now on the credit side, let's look at the account. And this is the point. This is why this comes in right here. Assets. What to increase? Debit to increase or credit to increase?
Asset increase, debit. Debit.
Debit. Everyone sure with that? Can we hear two brothers? Everyone.
Debit.
Okay, debit. What? Another brother? Do you guys agree with the debit?
Debit.
Okay, very good. So this is debit to increase, right? Debit to increase. Assets are debit to increase. And what to decrease?
Credit.
Credit.
Credit. What does he mean by debit to increase, credit to decrease? What does it mean? Let me give you an example. We have
Increase
inventory. Let's talk about inventory. Inventory are things that the company buys for resale. Okay, the company bought inventory. Inventory decreased or increased? The company bought inventory.
Increase.
Increase. Very good. So how will we record the company bought inventory? How will we record this? In the inventory account. In the inventory T account. So we're talking about the inventory up here, inventory T account. How will we record the assets coming into the company?
put in
Increase.
the debit side.
Okay, debit side of the T account. We will record in the debit side of the T. Okay, now let's just get to it. Okay, just understand this for now. We'll go step by step. You understand the point? Okay, now the company sold goods to the debtors or the accounts receivable. How to record this transaction? Sold goods. Did the asset decrease or increase?
Decrease.
Asset increase.
Wait, someone saying increase, someone saying decrease. The inventories. We sold the goods to the accounts receivables. Don't talk about
Inventory decrease, sales increase.
Okay, we're talking about inventory right now, guys. Don't get confused. Inventory. We're looking at the asset known as inventory. Don't look at the other side of it right now. We're just sticking to one side. You sold goods. The company sold goods to accounts receivable. We'll talk about accounts receivable later. Okay? So when the company sold goods to accounts receivable, what happened to the inventory? Did it decrease or increase?
Decrease.
Decrease.
Yes. Okay. So do we credit inventory or debit inventory?
Credit.
Credit. Very good. So when any asset, whether it be non-current or current, whenever it increases, you debit. Whenever it decreases, you credit. Now let's talk about liabilities. Are liabilities credit to increase or debit to increase? Which side of the T account do we put it if it increases? Example, you have loan. You have long-term loan over here. So I borrowed money from the bank. Company borrowed money from the bank. Will this be a debit entry or a credit entry? What happens to liabilities? Is it increasing or decreasing?
Credit entry. The credit increase, the debit decrease.
Okay. Liabilities.
Liability increase.
Does everyone agree to this? Credit to increase and debit to decrease. You guys agree to this?
Yes.
Yes.
No.
Okay, someone saying no, someone saying yes. Okay, who's saying no, who's saying yes? How many people say yes?
I say no.
I say yes.
Okay.
Yes.
Okay, two
yes,
yeses.
yes.
Two yeses.
Yes.
Two yeses and one no.
Oh,
Come on, this is
yes.
not a good ratio. Who says yes?
No. All yes.
All yes.
I changed my mind.
Okay, no one disagrees, right? Okay, there's ittifaq, there's ijma on this, right? There's consensus on the fact that liabilities are credit to increase, debit to decrease. Now, my example, the company borrowed money from the bank. How to record this? In terms of the T account for the loan, long-term loan. How are we going to record this?
Credit loan.
Credit, right? Why credit?
Because the loan increase.
Because liabilities are increasing. So you credit. Does everyone understand this?
Yes.
Yes.
Okay, now don't get, oh, what are you talking about loan? Where did loan come from? We already did all of this. Look, loan is right here. Liabilities. Liabilities, so you borrowed money from the bank, it's a loan. When you borrow money, the loan amount increases. When liabilities increase, you credit. When liabilities decrease, you
Debit.
Debit. Okay, can someone give me an example of liabilities decreasing?
The company
Paid out. The company paid out.
Paid what? Paid their accounts payable.
Debtor.
Account payable.
Accounts payable. Okay, we're not talking about creditors, debtors. We're talking about accounts payable or receivable. The company paid, someone saying accounts receivable. Why? Does a company have to pay its account receivables or take money from the accounts receivable? Receivable. Payable. The company pays the payable, right? Receives from the receivable.
Yes.
Right? You guys understand this concept, right? It's very important to clarify your basics. Basics. This is a basics class. Some people will say, well, this is so baby, I know this stuff. But trust me, if you understand these basic concepts, inshallah, the examples, things to build on this will be easy. Make sure you understand what is credit, what is debit, when to credit, when to debit. Very important. Do you guys understand this? If anyone has any questions, please do ask now. Anyone has any questions regarding what we have
Can
covered?
I ask?
Yes, yes. Go ahead.
Can I ask? So you say that if the business sell their products, so inventories will decrease and the asset will decrease. So it will put in the credit, right? Is it okay? Is it correct? And but we get cash, right? If we sell products, so where we should put
You're
the
going
cash.
ahead from what we already covered. We'll get to that. Alia, we'll get to that. Okay. So we're not confused. We don't want to confuse anyone here. I'm talking about what we already
Okay.
covered. Do you understand that the inventories are decreasing, so you credit? You understand that part? If you understand that part, then you're good to go. Understand that so far?
Yes.
Okay. Does anyone has any questions regarding what we have covered? We're going on. Okay. We want to go at a pace that everyone understands. It might be a bit slow for people, but then they get the guy said before. Inshallah, we will, when we understand the concepts, then then the rest will become very easy for us. Inshallah. Okay. Any questions? Can we move on?
So the cash is not the part of assets, right? I just need to clarify.
No, cash is an asset. Cash is an asset, right?
Oh, cash is still asset.
Yeah, cash is an asset.
Or is it equity or no?
No, cash is
Okay,
not.
thank you.
You're welcome. Okay, cash is an asset. Okay, we'll talk about the double entries just now. We're going into an example in 10 minutes, inshallah. Just be a bit patient, and inshallah, we'll look at all those stuff. Okay, equity. What comes under equity is revenue and expenses. What does revenue mean? This is the first time I saw this word. If someone thinks, can you guys explain to me what does revenue mean? Income. Very good.
Profit.
Profit, okay. Anyone else? Okay, revenue is what you get from selling your goods, right? The company sells goods and services. The money that is coming in from selling the goods is called the revenue. Okay? The coming in is called the revenue. Now, if someone said profit, then that's not exactly what revenue is. I'll tell you why in a minute, right? But just understand, what is coming in from selling goods is a revenue. Everything that comes in is a revenue. Okay, so now I'll tell you what profit is. Okay, in a minute. So revenue, types of revenue are, okay, when the company receives money, for example, the company income, all incomes are revenue. So let me give you a hint. So when you see income in front of something, just understand that this is a hint that this is a revenue. This is a tip for revenues, income. When you see income, that means it's talking about revenue. Okay, all incomes are revenues. And what is it? What one income increases when you receive income? Do you debit or credit? Is it debit to increase or credit to increase?
Credit to increase.
Credit.
Okay, so now I'm using short form. CR is credit. Okay, credit to increase. Everyone agree with that? Credit to increase?
Yes.
Okay. And debit to decrease. Okay, so this is what we're talking about. We're talking about revenue right here, right? So this is debit. Let me just move this a little bit. We get some space.
Can you explain again about the revenue?
I will just 1 minute. I'll explain. Okay, here we are. Okay, revenue, we said it is credit to increase, debit to decrease. Okay, what is revenue now? Revenue is, understand, When we sell something, the goods sold or service provided, when a company sells goods or provides a service, the money it gets through selling goods or providing a service is known as revenue, or the income, inflow of money is known as revenue. Remember when we talked up here, remember? Inflow of economic benefits. This inflow is called revenue. You guys understand that? This inflow is called revenue. Is that clear? Anything coming in through the sale of goods or providing service to the company is called revenue. Is that clear?
Yes.
Yes. Okay, the company provides a service for accounting. You guys, some of you guys will become accountants, inshallah. So the accounting firm provides service to a company. It does the accounting for them. So there's income coming in through this accounting. So what will happen? How will I record this? Is it a debit entry or a credit entry?
Double entry.
Double entry, understand, but how will I record it in the revenue account? Will I credit the account or debit the account?
Credit.
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 Debit.
Why credit? Why credit? Look here, credit to increase, debit to decrease. Look, revenue and assets are different. Don't get confused. Assets, debit to increase, credit to decrease. Revenues, credit to increase and debit to decrease. You understand that?
Yes.
Yes.
Yes. Okay. So when a company, accounting firm provides service to the company, to that particular business, and then the income coming from that service is gonna be credited. Why? Because it's a revenue. And when revenue increases, you credit the account. Is everyone clear with that?
Yes.
Yes. Okay, very good.
Sorry.
Let's move on to
Yes.
expenses.
Can I ask?
Yes, go ahead.
Why is the credit increase, but we get, like money flow into the business, right?
Yes. Okay, this is a really big question mark. I am not an accountant, so I'm sorry. This stuff.
Yeah, I think you said that if.
Yes. You were saying something?
Just that. No.
Okay. I'm telling you honestly, when I was studying accounting as well, I had this question and I asked my madam and she did answer, but I quite didn't understand really well the answer why. But just try to think of it like just memorize it without understanding why. I don't know. You can ask Madam Putri, okay? Tell her that, can you explain to me why revenue is credit to increase? And she might give you a good answer. But I'm telling you, if I give you the answer, you might get more confused. So for right now, for the purpose of this tutorial class, because remember, if you have these questions, I think it will be better if you ask the lecturer. They will give you a better answer. Inshallah, that will clarify your understanding. I don't want to get you more confused in anyhow. For now, understand that revenue, or even if I get the answer, I'll send it on the tutorial group, inshallah. If I get any reason why, is that okay? Sister, is that fine?
Yes. Thank you.
Okay. Inshallah, then for now, let's understand that revenue, credit to increase, debit to decrease. It's not like assets, okay? Don't get confused. Okay, now expenses. What are expenses? Can someone give me an example of an expense?
Something we out from our
Rent, very good. That's an expense. Another example?
Insurance.
Insurance, very good. Example is rent, insurance, tax, okay, tax expense.
bills.
Someone said something? Go ahead, come again.
Bills.
Bills. Salary. Yeah. Did you mean salary by bills? Oh yes, electricity bill. Yes, very good. Electricity.
Yes.
Yes, very good. Electricity is also an an expense. Understand what expenses are? Expenses are, why is it not a liability? What's the difference between liability and expense? Expenses are things, you know, these are, we do have to pay these, but they're due to the day-to-day running of the business, day-to-day running. Okay, so insurance, rent, taxes, salary, electricity, you understand what these things, and all of these have in common, that they're kind of day-to-day running of the business. You have to pay these expenses, you understand? So we won't categorize them into liabilities. Liabilities are things that a business owes, like, you know, that's due to a transaction that occurred, so they owe the creditors, the accounts payables, right? But when you're talking about expenses, these are things that a business owes from a day-to-day running of the business. You guys understand that?
Yes.
Okay, very good. So expenses, can someone tell me what to increase and what to decrease?
Debit increase.
Increase and credit decrease.
Very good. So credit to decrease, decrease, and debit to increase. Do you see these opposites? Revenue, credit to increase, debit to decrease. Expenses, debit to increase, credit to decrease. These things are very important. Just understand this. You will, inshallah, be able to do the others. Why one debit, one credit, one debit, one credit? You're supposed to know this really well. Is there something which you don't understand? Please tell me now. Anything you guys don't understand regarding what we just covered? Yes? Anyone?
Why expenses?
Why expenses
under equity?
Expenses actually reduce. Why is it under equity? Because expenses reduce. This is something you should know as well. Expenses reduce the retained earnings. And you know how retained earnings is part of the equity? Right? Who asked me the question? Oh, what's your name? Who asked me the question? Who's me?
Atira.
Okay. I didn't get it, so I'll call you sister. Okay. I think your voice broke up. So expenses reduce the retained earnings. The fact that the expenses are reducing the retained earnings is why we're recording them under. So they're kind of altering the equity, right? We said retained earnings is part of equity, and then we're saying that expenses are reducing the retained earnings. This is why we're recording it under equity. Okay. Oh yeah, the profit. Let me come and revenue actually increases retained earnings. It increases the amount of retained earnings that we have. So this is why the revenue increases the equity and expenses decrease the equity. This is the thing.
Okay.
Okay, understand, sister?
Yeah, thank you.
Very good. So now let's move on to what we have. One more thing. Okay, a brother told me that the revenue means profit, and then I corrected at that point, and I said that no, revenue is not profit. Let me explain you why. Revenue includes the costs, the expense, and all of this, right? Like it basically the total thing that comes in. For example, I bought this phone, right? My phone for say 300. I'm just giving a random price. This is not how much it works, right? $300. Okay. Now when I'm selling it, and I'm using dollars because I'm more used to this term, but you can say ringgits as well. So 300 ringgits. Okay. And then when I want to sell my phone, I sell it for 500 ringgits. Are you guys understanding this so far? Tell me if anyone's lost, please. I bought my phone for how much?
300.
300.
Good job. Perfect. I sold it for
500.
500. Okay, very good. What is my revenue?
200.
200.
200.
200.
Someone said 500. Someone said 500. Who said 500?
Me, 500.
Amina. Very good.
200.
Very good, Amina. 500 is right. What is my revenue?
Oh,
500.
yeah.
500.
500.
Why is it 500? Amina, can you explain the class? Why is it 500?
Because it is the
Because the total.
Okay,
the
wait.
money
Let
that you
Amina
get.
answer, please. Okay, go ahead. Amina, tell me why. Why did you say it was 500 in the first place?
Because it's what you get from the selling process.
Okay, everything that comes into the business from selling. Very good, Amina. Good job. Okay, and the others as well for trying. Good job. Keep it up. Okay, now when it comes to profit. Now that I'm asking you, what is my profit?
200.
200.
200.
Do you guys understand? Why is my profit 200? Why not 500?
Because the price that you sell it is 300.
Wait, Brother Rahman, can you explain once again? So that everyone can understand.
Because you sell it 300. Because you sell it because the price of the phone is 300 and you sell it 500 and you get the profit 200.
Okay, very good. So you said, you told in layman terms. Now can someone add on to what Brother Rahman just said and put it into more these accounting terms? What is profit? How to calculate profit? It's right there in front of you. It's in this place that we have right in front of the screen. We have the terms. What minus what is profit?
Retained earning.
Not retained earning. Where did retained earning come from? We sold
Gain on disposal.
What did we say? When we sold this, everything that came in was what? What did we call that term? Everything that came in.
Revenue.
Yes, revenue. Very good. Good job. Good job, Safi and Aulia. Okay, now when everything came in as revenue, and we said profit was 200, so what did we just do? What's the calculation? What minus what?
Revenue minus the model, the original price.
Revenue minus expenses.
Revenue minus expenses.
The selling price minus the cost price.
Yes. Selling price minus cost price. Okay. Why isn't my revenue? Okay, let us do. What is the correct way of defining it? How much time do we have left? Okay,
Net profit.
Okay, so someone said selling price minus cost price. Yes, but what about economic? We're talking about accounting terms. Come on, guys.
Net profit.
No, but we're trying to define profit. How can profit be net profit? How to calculate profit, guys? Revenue minus
Asset?
No. Okay, let me tell the exact thing. How to calculate? It's revenue minus cost, right? The cost of purchasing, right? Revenue minus total expenses. Very good. So someone said that revenue minus total expenses is a net profit. Okay. So what we have, remember I said it was on the screen right here. So revenue minus expenses is profit. Revenue, remember everything that came in was the revenue. Expenses now includes the transportation, the carrying, the cost of purchasing, everything comes under expenses. So we say revenue minus expenses is equal to
Profit.
Profit.
Okay, do you understand why I corrected the brother and said that revenue is not equal to profit? Is everyone clear now? The concept of profit and the concept of revenue?
Yes.
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 Anyone has any questions regarding this?
No.
No. Okay, alhamdulillah. So now we can move on to, okay, what's the next step? Okay, we already did this. We did this. This is double entry. Okay, revenue minus expenses is profit. All right, now you know what? We'll jump right into a question so that we can get more understanding of how now we're gonna be. So what did we do so far? We did the accounting equation. Then we did what are assets, what are liabilities, what are equity. The components of the accounting equation. Then we moved on to the double entry system and explained what is meant by double entry, right? Then we talked about the T account, right, which is with the basics of a double entry system. This is the basics of accounting. Okay, so we'll put that under here so we have it all together. Okay, so we talked about the T account. Then we talked about the nature of the accounts. The nature of the accounts. Actually, we didn't talk about the nature of the accounts yet. We'll talk about the nature of the accounts when we get to the question, inshallah. But what we did, we talked about debit and credit, right? Debit and credit in the T account. And then we talked about how assets, what to increase and what to decrease. Debit to increase, credit to increase. Liabilities, credit to increase, debit to decrease. Equity has two things under it, revenue and expenses. Revenue is credit to increase, debit to decrease. Expenses is totally the opposite. Is debit to increase and credit to decrease, right? Is anyone finding it too fast? Did we understand everything that was covered here so far that I just mentioned? And then we tried to tell what is profit, right? Okay, does everyone understand this? Anyone has any questions regarding what we covered so far?
No.
Just one person said no, and everyone else has questions. Then why don't you ask?
No.
Everyone
No.
understands?
Yes.
Any questions? Any questions?
Not yet.
No.
No, alhamdulillah. So everyone is 100% sure that they understand, right? Inshallah. So far, huh? Then we will go on to ours. So I will inshallah share this on our Google Classroom so that you guys can have it there. This is tutorial. I will come back to this. Right. So this is saved. Now we're moving on to our question. Here it is. Okay, guys? Okay. Now, the topic of our first question is double entry rule. Double entry rule. Did we discuss double entry rule? Does anyone have any? We understand double entry, right? What is double entry? What's double entry rule? The nature of the accounts. Can we move on to the question? Inshallah.
Yes.
Everyone is confident, right?
Yes.
Okay. Okay. Very good. So I will read the question, and I won't answer the question. I will want you guys to answer the question. Okay. And this time I'll choose. Okay. So and if I call your name, then please don't hesitate. Try. Just give it a try. You don't have to be right. Understand that. When Allah subhanahu wa ta'ala gives us an opportunity, grasp it. Just go ahead. Just move on. Then what will happen? Allah will make your path easy for you. Will make things easy. You will understand better. If you don't understand, Allah subhanahu wa ta'ala says in the Quran, what? فَاسْأَلُوا أَهْلَ الذِّكْرِ إِن كُنتُمْ لَا تَعْلَمُونَ. That ask the people of knowledge if you do not know. So asking a question does not mean that you're lowly, you don't understand, you're not so smart. No. Asking a question is learning knowledge. Right? That's what Allah subhanahu wa ta'ala says in the Quran. So you do not hesitate to ask questions. Number two, do not hesitate to participate and answer whether you know you're not 100% sure that's correct. Why? Because when you participate and answer, this is how you will learn, right? This is how you will learn. Make a mistake, and then next time you'll be right. Okay? Does everyone is everyone okay with this, right? I'm really happy with, alhamdulillah, the participation in the class. I wish this continues, inshallah. And okay, let's go right into the question. Distinct Colors Company provides painting, building services to company at a fee. Okay, now the first question. Is this company, Distinct Colors Company, a production company, or it provides services? Which one? Does it produce or provide services?
Service.
Service company, right? Very good. So this company provides services, does not sell goods. Understand that. Okay, the business provides you with the following transactions or business activities. What is meant by transaction? Business activities, okay? For its first month of operations in January 2019. So these are we have on the 1st, on the 9th, on the 15th, so 23rd and 30th. We have 5 transactions throughout the month. What are we required to do? Remember guys, read what you are required to do first. Don't be starting, okay, jump right into the question, start answering. Okay, no. What do you have to do? Read first. What is required from you and then start the question. Okay? What is required? Number 1, record the transactions in journal and post or copy to T accounts. Number 2, how much cash does a company have at the end of January? Number 3, prepare a trial balance at 31st of January 2019. We'll try our best to do as much as we can, but Madam Putri told me as well, and this is what I want. I don't want to rush. I don't want to rush. Why? Because I want you guys to understand this really well. Okay? So if I'm rushing and I'm getting all these questions done, right? But you guys don't understand. I'm going too fast. Then I think that I'm not fulfilling my responsibility properly. Do you guys agree with me?
Yes.
Yes, right? We need to understand. This is why I'm going slow. So maybe we won't be able to finish all questions. But if you understand, inshallah, and we go at a slow pace, we're going to, inshallah, meet every week. And we'll continue from where we left off, inshallah. And so once you understand, the practice is upon you now. I need help from you guys. I'm explaining you go home and practice. And then, inshallah, you can try asking madam if the answer is right. Also, you can try asking me, right? But then remember again that I'm also a student, so I have assignments and classes, and I'm taking a lot of credit hours. So all this, right? And so I will try my best to answer you, but I might take a little long. I might not be able to answer, so please don't feel bad, right? Because the fact that I'm very busy. But then what I'm telling you is please try these questions. If we're not able to complete them, you go try, you go home, and what we understand from today's class, you go ahead and you try, right? You try and attempt these questions. Okay, Madam Putri taught you as well, and then what you understand from today's tutorial class, and then inshallah you try, give it a shot, you try doing these questions, inshallah. Remember, when you keep on trying, that's when you will understand. Okay, Bismillah ar-Rahman ar-Rahim. We start from January 1st. It says the company received 42,000 ringgits from the issue of its shares. Okay, now I want to ask, let me see who is here. Can Sister Putri Emily tell me what will be the double entry for the first transaction? Go ahead.
The cash increase.
Okay, so no, not increase. Now we're going to talk about direct, debit or credit. And then what, debit, which one, credit, which one? Okay.
Credit, cash.
Cash. Okay, why? I'm not saying you're wrong, huh? I just want some explanation. For myself, clarification, for the other students as well. So, Putri, why do you think that you will debit cash? Where did you see? I don't see cash anywhere. It doesn't say cash here. Why cash?
Because I only assume it's cash.
Okay, right, very good. Okay, go on. Next, debit cash, and the cash, how much? What's the amount?
42,000.
Very good. Okay, and then?
Debit.
So you already debited cash, right? What does double entry mean? Now the other side should be credit, right? One side debit, one side credit. The other entry should be credit. Credit what?
Credit capital.
Okay, very good, capital. But can you add a little more description to the capital? What kind of capital is it? Where did you get the capital from?
The share capital.
Yes, very good. And what's the amount?
Huh?
What is the amount for the
42,000.
Okay. So very good, mashallah. So what did we say? We said that, I'll open on the doc so that we can write directly into it. Hopefully it doesn't mess up when we open it. Okay, alhamdulillah, we had this here. Okay, you guys can see it, right? Is it too small? Okay, now it's
No,
better.
it's
Okay, very good. So Putri, Emily was 100%. Alhamdulillah, she got 100 per thing for that. Good job. And okay, now, why did we do cash? I asked her and she said that's what she thought. Let me tell you, you should write this down as well. When nothing is mentioned, as when on credit is not mentioned, and you just see received 42,000, received 42,000. When you say received, received means cash automatically. You guys understand? Received will mean cash, right? So this is a hint. This word is a hint that, okay, a hint for cash, right? So I'm just writing very shorthand notes, right? So received would mean that cash is coming in. When we say on credit, let me add on to this, huh? When we see the word on credit, this word, this is a hint. What does on credit mean? Accounts receivable. Okay, this is accounts receivable. Why accounts receivable? Because let me tell you. On credit is accounts receivable. So hint for received 42,000 from the issue of its shares. That means received what? Cash. So you debit cash. When it comes to when it comes to what do you call it? On credit, if it said the company, right? For shares, it's always cash, right? Whenever the company issues shares, it gets back cash. Whenever the company issues shares, it gets cash in return. So this is understood. And when you see received this amount, received means you got it. And in what form will you get it? You will get it in the form of cash. You understand? So whenever you see receive, you debit cash. So in here, you will write, you debit. Remember, when you look, this is a journal. This is called a journal, okay? When we put it like this. We talked about the T account, now we're talking about the journal. So the journal is where you put, this is called the journal. Okay, this is the journal. Let me just, this is known as this is a journal, okay? This is where you record the transactions, the double entries. So you have received, you debit what? You debit cash. Remember, always write the debit side first. This is the rule of the journal, okay guys? So cash, you always write debit first, debit. Whichever side is debit, write it first, okay? Whichever account is debit. And then you write the amount, which is 42,000. Okay, then you go to this side. Remember we said what side of the T account was credit? Right side. What side was debit? Left side. Remember guys? Remember this?
Yes.
Remember this? Credit side right, debit
Yes.
side left. So we always start from debit, then we move on to credit. Whichever account is debit, we write that first on the right side, on the left side, and then we move to the right side and we write which account is credit. Okay. Now we move on to the credit. Which side was credit? We said share capital, right? We have share capital as credit. How much? 42,000. 42,000. Very good. Okay, now we move on to the next person. We'll go get one from this side. Okay, can Wildan Farouz answer the second question? Which is January 9th, purchased painting supplies, right? It's for 16,000 ringgits on account. On account. Okay, so I'll just highlight the important word, right? For you to, it's a hint for you, okay? Go ahead, Brother Wildan.
So Is it debit? Wait. Spending supplies. So if purchase is, it means it's an expense, isn't it?
Purchased on account. Okay, what do you understand? Wait a second. What do you understand from on account? It's something very similar to this. On account, on credit. What does that mean?
Is it debit account payable?
Okay, but you said it was an expense. That was wrong. What is this? What is accounts payable? Remember we looked at this earlier? What are accounts payable? Are they expenses? Which category do they come under?
Wait. Purchase when debit supplies.
Okay, very good. Debit supplies. How much?
And 60,000, 16,000, yeah.
So you have debit supplies 16,000. Okay. Credit.
And credit account payable.
Accounts payable. How much?
16,000.
Right, very good. So okay, can you tell me why did you say accounts payable? Where did you get? It doesn't say accounts payable right here. So why did you say accounts payable? What do you understand?
Because the company purchased the supplies. So
okay. So why not cash?
Because they say on account.
Okay, on account. So that's the hint, right? That's the keyword. So what does on account mean?
On account was, I don't know.
Look, what does okay, on account. All right, thank you. Thank you, well done. Okay, yes, what are you saying, Atira?
On account means on credit.
Yes, on account means on credit. Very good. So on account means on credit. And what does on credit mean? We just said that up here. What does on credit mean?
We bought something but we did not pay yet.
Account payable or debt.
Okay, guys, there's one more thing to this. If you say purchased on account, so this is one important word, purchased on account. Okay, if you have purchased on account, this is accounts receivable. Let me just delete this. Okay. If it says purchased on account, then it is accounts receivable, right? What if it says sold on account? What if it says, what if it says, sorry, why am I saying receivable, man? It's payable, accounts payable. Payable, because you purchase on account. So you purchase on credit. You owe them, right? Remember, you owe them. The company owes the firm where they purchased it from. Okay. What about if it says, what if it says sold on account? What about this one? What do you guys think about this?
Account receivable.
Receivable.
Yes, very good. Accounts receivable. So this is when you have sold on account. When purchased on account, accounts payable. Okay, so this is a keyword, sold and purchased. Okay, good job, Brother Wildan.
So to ask,
yes, go ahead.
why debit supplies not purchase?
Why would you debit purchase? Purchase what? Remember, there's something. You will debit an account. You will debit an account, not a word, right? So what purchased on account? Remember we said purchased on account goes together. Purchased, whatever, on account. Purchased on account. This whole thing means accounts payable. It denotes, it kind of hints towards accounts payable. Okay, when you're talking about purchase account, so if it says purchased and it does not say on account, so what if it says like Purchase painting supplies this much. Then what would you do? Then you would debit supplies and credit cash. You guys agree with me?
Yes.
Okay, because no on account. But on account means on credit. That means that you did not pay them yet. So, sister, you asked that why purchase. So, purchased on account is one thing. Don't separate it. Purchase on account means purchase on credit. Purchase on credit means you bought it, but you didn't pay for it. And if you bought something and didn't pay for it, you owe them. You owe them. And when you owe someone, they are your accounts payable. Do you understand? This is why an accounts payable is a liability. When you buy on credit, your liability is increasing. When liabilities increase, what happens when liabilities increase, guys? Liabilities increase, debit or credit?
Credit.
Credit. This is why accounts payable credit. What about supplies? Why did we put supplies here? What are we buying? What are we buying? What are we getting? We're getting
the painting.
We're getting the supplies.
Okay, yeah, we're getting painting supplies. We're getting painting supplies, right? So now these supplies, what are we supposed to do with these supplies? They're coming into the business or going out. And what are they? What are supplies? Remember which category do they fall under? Are they liabilities?
Assets.
Yes, they're assets. Okay.
Assets.
Are they non-current or current?
Non-current.
Current.
Current, sorry.
Current assets. Good. Okay, now supplies. When you purchase supplies, are your supplies decreasing or increasing?
Increasing.
Price increase.
Increasing. When current assets, when assets increase, debit or credit?
Debit.
Debit.
Debit. You see how everything that we learned is now you're putting into application? Do you guys understand how? So this is why it's very important to understand what we discussed earlier. Understand that well. So you can easily do this stuff. Because you put in your mind, okay, what is this? It's an asset, liability, equity. Okay, it's an asset. Now, is it increasing or decreasing? If it's increasing, then I will debit. If it's decreasing, I will credit. So you put all of this should be going on in your brain when you see this question. Okay? Okay, now we have how much more? Are you guys okay if we complete this, just the journal? Are you guys okay to stay a bit like 5 or 10 minutes longer?
Yeah, I'm okay.
I'm okay, sister.
Is everyone okay? Can we move on, or you want to continue next class?
Okay.
Okay?
Move on.
Okay.
Yes, is someone saying no?
Okay, sister.
Wait,
Okay.
Did someone say no?
Okay, sister.
Okay. So we're getting most okays. Okay, so let me also say this, that since the class time is done, if someone has something to do, they can leave. So you guys have permission, right? And you guys can catch up on the notes. But if you guys are free just for 5 minutes, we're just completing this, and then inshallah we'll complete class. So it's good if you can stay, inshallah. Okay, so now we're moving on. So the 15th, January 15th, provided service for customers and received cash 24,500. Okay, now I will ask who to answer. Let me see. Can Nurul Faqiha answer? Nurul Faqiha, give it a shot. Bismillah. Okay.
Debit cash, credit, and service revenue.
Okay, you are gonna debit cash, credit, service revenue. Remember, whenever you say debit, tell me the amount as well. Debit what? How much?
Cash 24,500.
Okay, and all right, debit cash 24,500 and credit what? Service revenue. All right. Can you tell me a little bit about, say I'm so new to accounting, I don't know anything before, and I just see this, I'm like so confused. What am I supposed to do? How am I supposed to do this? Can you explain me, Nurul Faqih? How are you? Okay, Nurul Faqih, can you explain me how am I supposed to look at this question and understand where did debit cash come from? Where did credit service revenue come from? Can you explain what went on in your mind, and that's why you said it was cash and service revenue?
Um, I don't know lah what to explain.
Just say in your basic words. What do you understand? Okay. Do you want to give it a shot or should I explain?
Hmm.
Okay, then I'll explain. No problem. Very good. Good job, Nurul Fatiha. Well done. Okay, so what we understand is, look, whenever you see a question, look for the key terms. Remember, these are the key terms that I pointed out here. The key terms in the question. Provided service. Provided service. What does this mean? When you provide service, then you receive income, right? Remember what we said? Provide service, you receive cash. So what is this providing service? Remember what we said? When we sell goods or provide a service, what do we receive?
Income.
Income or revenue, right? You guys remember?
Yes.
Okay, very good. So now this is the key point where this thing provided service gives us a hint that this is service revenue. Do you guys understand? Service revenue. And once,
yes.
Okay, provided service is service revenue, the amount. You have to get the, just extract the accounts from here. Okay, for customers, received cash. This is so, before they said just received. Now it's saying received cash. So you already have the name in here, right? This is very clear, right? Received cash. So now can you tell me, when we're debiting, so we see what is coming into the business, received cash. What is cash? What kind of account is cash? Quickly tell me.
Cash, asset.
Okay, don't tell me only asset. What kind of asset? Non-current, current?
Current.
Current asset. Okay. Is it increasing or decreasing? Are we paying cash or receiving cash?
Receiving.
Receiving cash. Okay.
Receive.
Now, when you receive cash, is it increasing or decreasing?
Increasing.
Increase.
Okay. So when your assets are increasing, how do you record it?
Debit.
Debit. So debit it. Okay. So you're receiving cash, your assets are increasing, you debit cash. This is why we're debiting cash, 24,500. Now let's look at the other side of the transaction where it's credit. So it says provided service revenue. We know this is service revenue, right? Okay, this is provided service. This is service revenue. We extracted that from that word right there. Okay, now from service revenue, is our revenue increasing or decreasing?
Decrease.
Revenue is decreasing, but we're providing the service now. We're getting money. How is it decreasing?
Increase.
Increase.
Understand why it's increasing? We gave them, so we got back revenue, right? So our revenue is increasing. Think about it. I sell this phone, I get revenue, my revenue increases. I provide service, I get revenue, my revenue increases. You guys understand that?
Okay.
Understand, right? Okay, when revenue increases, tell me, is it debit or credit?
Credit.
Credit.
Credit, very good. So revenue increasing, credit. What is the name of the account? Hey, don't put over here. Na. Go tell madam. Provided service, madam. The account's name is provided service. No, the wordings for the question is providing service, but you extract the name of the account. What's the name of the account? Service revenue. Understand?
Service revenue.
Very good.
Yes.
Okay, now let's move on to the 15th. There were two transactions. Second was use 8,000 worth of painting supplies to complete the service to customers. Okay, now I will ask, can Atiq answer this? Answer this?
Yes.
Okay.
I think.
Okay, just give it a try. Just don't don't worry if it's wrong. We'll help you. No problem.
I think credit 8,000 and debit.
Wait. Credit 8,000, but what should I write? What's the name of the account? What should I write? Tell me the name of the account and then the amount.
Bank.
What is it?
Cash.
Cash, okay. But why did you start from credit? We start from which side? We start from the debit side, right? Start from the, tell me the debit first, then the credit. Debit, then credit. What debit? What are you debiting here?
Debit. complete this. Supply.
Okay, yes, you will debit. Let's add a little more description to it. What kind of supplies?
Service supply.
Service supplies. What's the name of the supplies here?
Painting supplies.
Okay, so you said, okay, debit painting supplies. How much?
8,000.
All right, painting supplies 8,000 ringgits.
Okay.
And credit.
Credit cash 8,000.
Okay, the credit cash. Okay. You credit cash. Why cash? Can you read the thing again for me? What did it say?
Because before this, we got received cash 24,500.
Okay. Just read that for me. Just read it, and then we'll think what to do next. Can you read the second thing? Read it here from here.
Cash.
Use.
Credit cash.
Can you read the transaction?
Use 8,000 worth of painting supply to complete the service to customer.
Okay. What's happening over here? Let me explain what's happening. Okay, you can just pause for 1 minute. Used 8,000 worth of painting supplies to complete the service to customers. Use supplies. Okay, now I'll tell you guys what the keywords are here. Used painting supplies. These are the keywords. Okay, guys? Used painting supplies. Remember, on the 9th, we bought painting supplies on credit. Do you guys remember that?
Yes.
We bought painting supplies on credit. Okay, now we are using the supplies we bought. How much was the total amount of, how much did we buy it for? What was the total cost of the supplies we bought?
8,000.
16,000.
Okay, very good. Okay, let's let Brother Atik answer this, okay? I don't know if I said the name right. Okay, so so we are using up the supplies that we bought. You guys understand what's happening? So the company bought supplies on credit. Okay, now it has a stock of supplies. Now the company needs it. I'm a tutor, and I go to the general office and say, I need to tutor my students. I don't have a marker. Can I borrow a marker from you? Okay, then some other person comes. One madam comes. My markers are complete. Are finished. I need ink. My pen is done. Okay, all of this. So they're using up the supplies. The company used 8,000 ringgits of supplies. Okay, of the total of how much supplies?
8,000.
What was the total supplies?
16.
16,000. Huh? What was the total number of supplies? Total amount? Right here. 16,000, right? Right, guys?
Yes.
Okay. So, okay, now do you guys understand what's happening? So we bought on credit 16,000 with supplies. Now I need it, so I'm going and using. I use my supplies 8,000 from the 16,000. Is there any cash involved? Brother Atik, do you think there's any cash involved?
No.
No, right? Okay, so are you going to take back the cash that you said earlier?
No.
You won't take
Yes,
back?
yes.
Okay. Okay, you'll take back the cash. Now, okay, now that you take back the cash, what should we credit then? So this here is supposed to be credited, not debited. Okay? I'll tell you why. Okay. So what we'll do here is we'll credit this and we'll debit. This is known as supplies expense. Have you heard of this before? Okay, now let me explain you why. The supplies we had, we are using up. These supplies were our assets, remember? The supplies. We are using our assets. When we use our assets, it's an expense for us. because we're using up our assets. Get it? We have to basically pay. We are using up the money or the assets that we had, so it's recorded as an expense. Okay. Okay, and think about it. The total amount of supplies was 16,000. We used up 8,000. How much supplies are left now in my thing? How many supplies remaining in the stock?
8,000.
8,000. Do you guys understand what's going on?
Yes.
Okay, remember guys, every time you see used supplies, this means you have to, every time you see used supplies, so used supplies means you debit every time. This is going to be the transaction. So just remember this for once. Debit supplies expense and you credit. You credit supplies. This is always a transaction. You understand? Always the recording. So you use supplies, debit supplies expense, credit supplies. Is that understood, guys?
Uh, can we see that our expense is increased, but then our asset decrease?
Yes, that's what's happening, huh? Why? Okay, why do we debit supplies expense? Expenses are what to increase? Debit or credit? Expenses are debit to increase or credit to increase? Come on, guys, we did this.
Debit.
Debit to increase.
Debit.
Okay, and what are we using up? We're using up our assets. When you use up the assets are decreasing, correct? Supplies are decreasing. So supplies are what to decrease? Debit or credit?
Credit.
Credit to decrease. Very good.
Credit.
Very good.
Credit.
Okay, does everyone understand this transaction? Use supplies.
Yes.
Alhamdulillah.
Supplies, debit supplies expense, credit printing supplies. Okay, does brother Atik understand this?
Yeah, yes.
Understand? So there's no cash involved. You get it? Okay, what
Yes.
what are the painting supplies? We're gonna use the same amount, which is 8,000. You guys understand? So we will use 8,000. Okay, now let's move on to the 23rd. Paid 10,000 ringgits on accounts payable. Paid 10,000 ringgits on accounts payable. Okay, let me ask. Can from the side on visit. Sophia Ashraf answer. Sister Sophia Ashraf. Paid 10,000 on accounts payable. What do you think? What are we supposed to do? Don't hesitate. Just give an answer. Inshallah, if it's wrong, we'll help. Go ahead. Paid. Okay, think about it. Analyze. Paid. Paid what? What do you pay?
Paid 10,000.
Okay, that's 10,000. 10,000 what?
On account payable. So
what do you pay? How do you pay? What do you pay using? Do you use pencils to pay or you use notebooks to pay? What do you pay? What do you use to pay?
cash.
Yes, you use cash. You get it? Use cash. Okay, now tell me what are you supposed to do? On accounts payable. Can you tell me what are the accounts payable? Do we have any accounts payable?
Yes.
How much?
16,000.
Okay, so now analyze. What's happening to accounts payable? What is accounts payable? Is it liabilities, assets, equity, revenue? What is it? Accounts payable.
Liability.
Liabilities. So we are paying accounts payable. Is it increasing or decreasing?
Decreasing.
Decreasing. So when liabilities are decreased, debit or credit?
Debit.
Debit. So what do we debit?
Debit.
You just said it right now. Debit?
Account payable.
Yes, accounts payable. How much?
10,000, right?
How much did we owe them though?
Can I see the question back?
Okay, sure. Yes, it is 10,000. It's correct. 10,000. So it is 10,000. Okay. Credit. What did you pay using? What's going out of the business?
Cash.
Cash. Cash is in? What kind of accounts is cash? What is cash? Almost half an hour.
Asset?
Yes. So is it increasing or decreasing?
It's decreasing.
When your assets are decreasing, how to record them? Assets decrease. Credit or debit?
Debit.
Debit.
Credit.
Debit?
Debit.
Credit. You tell me. Is it debit or credit?
Credit.
Sure.
Yes.
Okay, very good. So your cash will be credit. How much?
10,000.
Okay. Do you understand, Sophia? Is that right? Does everyone agree with this transaction?
Yes.
Yes.
Yes. Okay, alhamdulillah. So remember, guys, you see how I walked Sophia through? Do you guys understand the steps that we took to understand the transaction? Anyone is lost? Anyone has any questions? Please ask.
So far, so good.
So far, so good. Anyone has any questions? Brothers, sisters, any questions? No questions? Can you move on?
No.
We can't move on? We can move on, no questions, right? Okay. So remember, when it's paid, remember, received, nothing, received this much. We said it was what? Received means received cash. Similarly, paid this much, paid, the thing which is missing here is paid, is a hint towards cash. Okay, it's a hint towards credit cash because you're paying using cash. You understand? Okay, now we have accounts payable. Accounts payable, when it's decreased, it's debit. Okay, last one. January 30th, the business paid cash 12,700 for the other operating expenses. Okay, let me ask. Can Ammar Shafi answer? But Ammar, what do you think? How
No?
to translate? Yes?
Wait for me. Operating expenses should be debit with
Okay, how much?
20,700.
20,000.
20,700.
You sure it's 20,000? Look at it properly.
Yeah, sorry, 5,000.
Okay, make sure you don't make that mistake, huh? Operating expenses. Okay, what is the other operating expenses? Right, so we just put operating expenses. Operating expenses is 12,700 debit. Okay, can you tell me why are you debiting expense? Why did you debit this? Why did you debit expense? What came through your mind?
Because I'm quite unsure about that.
Okay, you're unsure about that. Tell me about the nature of the account. Expenses, are they increasing or decreasing? Your expenses are increasing or decreasing? When you pay your expense.
Decreasing.
Decrease. So,
Yeah.
okay, when you're paying expenses, okay, the thing is, with expenses, every time we pay an expense is recorded on the debit side. whenever we're paying expenses. Okay, this is something that one of the things that you just have to understand, like, you know, just have to know that whenever we're paying expenses, we debit the expense account, debit, because we're paying the expense. Okay, but now when we're saying that, okay, now what are we supposed to credit now?
Credit is cash.
Credit. Okay, why credit cash? What kind of account is cash?
Because it's mentioned cash, right?
Paid cash, right?
Yeah.
So you credit cash. Okay, cash is, tell me what kind of account is it? Is it liability, equity, asset? What kind of account is it?
It's a liability.
Cash is a liability. You sure? Cash. Okay, let's go back here. Where does cash come? I don't see any cash here. Where's cash?
Cash, okay.
The current asset, right? Okay, it's a current asset. Okay, assets, is it increasing or decreasing? Your cash?
Decreasing.
Decreasing. So decreasing assets. How do you record that?
Credit. Decreasing asset.
Credit, right? So this is why, so these steps that I just mentioned, guys, this is what's supposed to go through your mind. First, the first step, nature of the account. Is it asset, liability, equity, revenue, expense? What is it? Okay, next thing, is it increasing or decreasing? Okay, third thing, what am I supposed to do if it's increasing? What am I supposed to do if it's decreasing? So these are the three things you're supposed to go through your mind when you look at a question. Okay, first thing, extract the accounts. Second thing, ask what is the nature of the account. Third thing, okay, you guys take down these steps, huh? Firstly, extract your accounts from the transaction. Second thing is you use these accounts now and you think what is the nature of the account. Okay, following, guys? What was the first step? Anyone?
Extract the account.
Okay, second step?
Extract the account.
Second step?
Finding the nature of the account.
Very good, Amna. Okay, third step is asking yourself whether is it increase or decrease? Increase or decrease? Okay, guys, what's the third step?
Asking whether it's increase or decrease.
Very good. Okay, so now the fourth step is you ask, is it credit to decrease or debit to decrease? What's the fourth step?
Ask if it's credit to decrease or debit to decrease.
Credit to increase. Okay, very good. So these are the four steps, and then you record according to that. Debit goes first, credit goes second. Okay, guys. Very good, Brother Ammar. You answered correctly. Right, cash is going out because paid cash, how much was it? It's 12,700. Okay, alhamdulillah, now we are done this entire part A, at least a part of the part A. So this is journal, right? So now we have to copy to T accounts. Then we need to find how much is cash. This will be the balance brought down. Let me just give you a hint here. This is actually balance brought down. So guys, next, our agenda for the next class, inshallah, will be to balance accounts. Okay, what is it meant by balancing an account? How to balance, how to record in a T account, and then preparing the trial balance. Okay, and then we'll probably move into the statements if we have enough time. So we'll for next class, how to post into T accounts, how to balance the T accounts, how to prepare a trial balance. Okay, after this, if we have time, we'll move into, inshallah, we will move into the statements, right? The statement of financial position, statement of profit and loss, depends on how much your teacher covers, how much madam tells us to do. As for you guys, please do practice. We have a lot of questions here to practice, okay? And madam has already provided you with these, boxes. So it's so easy, just write it. Print these out, whatever you can, just practice, okay? Practice. Try to get familiar with the names. Remember, the first step is extracting the accounts. As soon as I read this, the company provided service and invoice this much, received this much cash, remaining balance on account. How am I supposed to analyze this? What are the accounts? How to extract? How to do the second step, which is to find the nature of the account. How to do the third step, which is to know whether it's increase or decrease. Fourth step, is it credit or debit to increase or decrease? How am I supposed to record it? Okay, now what to do? Wait, how to post in the T account? Okay, guys, so it's your practice now. Is everyone understand? Is everyone clear with this? It's your part now. Now I have explained to you, Madam has explained to you. Now you have to do the practice. Okay? Is everyone fine?
Okay, sister.
Okay. Now just closing off, inshallah. I want to ask you guys before I close off, what we discussed here, right, from the beginning until here, and what we discussed throughout here, 1 to 30. Is there anyone who has any questions or doubts which they do not understand? Please ask now. Any questions?
Sisters,
Yes.
can you please give example again about the mortgages and debentures for non-current liabilities?
Okay. So who is this? What's your name?
Risha.
Okay, Risha, let me do this. Inshallah, I will post the examples in the group. Is that okay? You're in the WhatsApp group, right?
Okay, thank you so much.
Everyone is in the WhatsApp group. If you aren't, then you can join because I already put the link in the Google Classroom. Okay, please join the WhatsApp group. We'll have our discussions on there. Any questions you can ask, I'll try answering. Okay, I'll try posting. So I will note this question down. The question is examples for mortgages and debentures. What is it? An example. Okay. So inshallah, I will put this in the class. Okay. Any other questions? Anyone else has a question? No questions?
No.
No question. Okay, now can I ask, everyone clear? Is everyone clear about everything so far?
Yes.
Yes.
Okay, what about the brothers? Are you guys clear as well?
Yes, yes.
Okay, what about the others? Everyone is clear?
Yes.
Other brothers except for Brother Ammar, are you guys clear?
Yes.
Okay. Well, I'm not hearing from the brothers, but hopefully you guys are all clear, right? No questions, everyone's clear, inshallah. So let's end off with Tasbih Kafara, right, in Surah Al-Asr, and then we will continue with, inshallah, our T accounts and balancing and all that next class, inshallah. So, inshallah, you guys can write your feedback on the WhatsApp group. Tell me I need to improve on this. Please, I won't take it wrongly. You guys, as I said, I'm a student as well. We're all learning. So definitely there's some mistakes probably that I can, work on. So if you say, Sister Fatma, please, explain slowly or give more examples or, please do tell me. I will try to implement those in my next class, inshallah. Okay, guys? All right, let's finish up. Subhanallah wa bihamdihi, subhanakallahumma wa bihamdika, nashhadu an la ilaha illa anta, nastaghfiruka wa natubu ilayk, subhana rabbika rabbil izzati amma yasifun, wa salamun ala al-mursalin, walhamdulillahi rabbil alamin, wal 'asr inna al-insana lafi khusr illa alladhina amanu wa 'amilus salihati wa tawassaw bil haqqi wa tawassaw bis sabr. Right, thank you all for attending. Jazakumullahu khairan. See you next week, inshallah.
Thank you so much.
Thank you so
much, sis.
Thank you, sister. You're welcome.
Thank you, sister.
Thank
You're
you,
welcome.
sister.
Jazakumullahu khairan. You're welcome.